Hello, ladies and gentlemen. I am Sato, the CFO of the company. Thank you very much for sparing your time from your busy schedules to be here today. Without further ado, I would like to start by talking on slide 2 to report on our financial results. Regarding the Q2 overview, we have the outline here of the numbers, and I would like to talk about the cumulative numbers here. In terms of sales, versus same time last year, we are up by 26.6%. At 70.114 billion yen. Operating profit up by 33.0% at 7.386 billion yen. Net profit is also up. The tax rate has been normalized at 32.4%, tentatively calculated, but this has been absorbed in going up. Net profit up by 17.3%, reaching 4.854 billion yen. Orion Managed Service. From October, it has been consolidated, but Softworks, the company that we've announced the purchase of as of November 26th, will only be consolidated from January, and on the balance sheet from December. Now this time, to be honest, I had to do some thinking whether we should upward revise our numbers or not for the full year. And we are sure that the full year will see a better financial result than the guidance. But actually, we have some various other uncertainties that we need to take into consideration, and that's why for the full year of FY 2019, we have decided to remain keep the guidance unchanged. I would like to talk about this a little bit more later on slide 5. But first, let me talk to slide 3. This is the managerial performance by business units. So first of all, our flagship business, the engineering staffing, the 8 companies in Japan and 4 companies under the overseas category, all business line units have been able to deliver an operating margin of about 10%. In the past 3 years, we have been promoting the M&A, and steadily the M&A companies are contributing to the performance of the company. Now, as a result, you can see that the global sales is now up to 7.4% of the total corporate sales. I'd like to move on to slide 4. You can see all of the business units by organization here. First of all, I'd like you to see this right half. This is this year, and the left-hand side is last year. You can see that 5 companies are added in red squares. These 5 companies, as of December 2017, these did not exist. So if we take out these 5 companies and compare apple to apple, organic base growth of the top line was 15.6%. Also, I'd like to note that we've received requests from you about the numbers that we report in the earnings briefing report. There's a category called financial reporting for R&D outsourcing and construction management outsourcing. We have the marks on the companies now. The square is R&D outsourcing and the triangle is construction management outsourcing. So please confirm them on this slide. Moving on to the quarterly performance results. The progress versus full year guidance for the 6 months is 52% for revenue, 55% for operating profit. So we are at the same level as last year. Now, as we have announced, we have seasonality in our business results. I just explained that the first half of this year, we have the results from the M&A that we've acquired in the second half of last year, and because of that, we have more profit in the first half. But in the second half of this year, it will be a comparison with the same M&A companies included. So that's why the growth of the profit in the second half of this year will be slightly less than the first half of this year, which cannot be helped, we think. Also, I'd like to mention that this year we are going to hire over 1,000 new grads from universities as of April. We had 889 last year. Last year, we had an increase of 250, 260 more versus last year. But this April, we are going to hire more than 1,000 new grads this April. And that is because we have more orders. And so, based on the calculation that we will have 1,000 new grads on board, just taking salary, but not really performing on training. And so that's why we always seasonally have a bit of a slump in our performance in the springtime. This is the pattern seasonally for our results every year. Now, Mr. Nishio will later explain in detail about this. But the reason why we did not revise our guidance upwards for this fiscal year is because of the second half of this year. But it is not to say that our business is uncertain. There are some people who see the economy going slightly down in the second half of the year, but for us, we are getting very strong orders, although there are some differences between the companies, the clients. But it was very difficult just to decide how much we should revise our numbers upwards because of the uncertainty, and that's why we did not revise the numbers ultimately. I'd like to move on to talk about the P&L summary. I'd like to explain the reason why the revenue went up. First of all, impact of engineer increase boosted 8.2 billion. Impact of unit sales price 320 million. M&A contribution 6 billion, 6.1 billion. As for the gross profit, the ratio is 24.9%. This is 0.1 point improved versus last year, and this is basically due to the impact of utilization rate, which has risen. And I will explain about this later in more detail. Also, if you look at the P&L, we have a bit of a swing versus last year, because last year, if you remember, I think many of you do, we had the difference of 180 million yen when switching to the defined contribution pension. It was a loss of 180 million yen, and we do not have this year. So that creates a gap in the other expenses. And also, we have 2 foreign companies now, so foreign exchange also has been giving us a positive impact due to the stronger yen. So that's why we have some differences in the other income, other expenses line. Moving on to the balance sheet. We have a very healthy balance sheet maintained, but I would like to comment on a few points. First of all, goodwill. We have acquired companies this year, and due to that, we are up by 2.9 billion for the goodwill, and also other liabilities have risen a bit as well. And this has been explained when I talked about the foreign exchange. We did not acquire 100% of some of the foreign companies. It's an earn-out contract, incentive contract, so we have the put option from these businesses on the other liabilities. Next, a number of engineers and utilization rate in Japan, domestic business, on slide 8. Engineers on payroll in Japan at the end of Q2 is 17,638, and including the overseas engineers is 861. Even 110 members up with the non-Japanese engineers. The average utilization rate of 96.4% was achieved for the first half. This is up 0.1% year on year. But actually, as I've mentioned many times, our comfortable utilization rate is 95 to 96%. And that is because we have some engineers that are on training, not being utilized, a few percentage of that. And these are stock that will be assigned in the next month. We need a few percentages, a leeway there. So 96.4% is good as a short-term result, but it is not good when you look at the longer-term business. Now, outside of this business, we have the engineers outside of Japan, 1,623. So we have an engineer base of 19,200 now. all in all. Moving on to the next page, recruitment turnover. So hiring is 1,744 in the 6 months. MI System 43, Tokuo 35 engineers are included in this number. This number is up by 212 first half versus first half compared to last year. Turnover, we have 50 more, but the full-timers in the first half is down to 7.3% turnover rate. It was 7.9% last time. So various activities that we have implemented have helped to reduce the turnover gradually. Moving on to the assigned engineers by technology, please look at the pie charts. You can see the number of assigned engineers. In all technology fields, the number of assigned engineers increased. But basically, we see a very strong demand for IT engineers because people have a sense of very strong shortage in this area. So we're getting a lot of requests for this. 47% is the composition of the software engineers today. Moving on to the next pie chart, assigned engineers by industrial sectors. The point that I'd like to highlight here is that the number of assigned engineers increased in all industrial sectors. Of course, there's a difference, some contrast between our client companies, but we have a strong demand from all industrial sectors. This pie chart proves this, especially even if it, especially in the software area. For example, model-based development or embedded software, etc. In any sense, software engineers have very strong demand currently. Moving on to the next slide, 12. This explains the unit sales price. Regarding unit sales price, the business model overseas is different. So we're only looking at the two companies in Japan here. So right now, we can see that the unit sales price increased 0.5%, up by 3,300 yen to 633,000 yen. Compared to same time last year, we have less days, 0.1 day per month, and overtime down by 0.8 hours per month. So there is a reduction of 4,000 yen per month year on year due to these reasons. But we have increased 15,000 yen per month, driven by increased contract price for existing engineers on assignment. We have the trend on the bottom. You can see that we're around 2.7%, 3%. This is the situation where we've been able to continuously increase the price of existing engineers on assignment. Now, I'd like to talk about the share repurchase program announced on November 28th last year. Since October last year, the stock market has gone into an adjustment period, and our beta has been 1.2, 1.3. The decline was bigger compared to the Nikkei average. But we believe that we're very underweight, and it does not reflect the fundamentals of the company. So that's why we have announced to repurchase our shares. The contents have already been released to the press, but when we filed to the Tokyo, as we reported to the Tokyo Stock Exchange, we have not executed this share repurchase yet because we are not insider free yet. But we will continue to be very flexible to manage this up to November this year. Finally, I'd like to talk about the dividend. In formality, we have decided to maintain our full year guidance. So that is why the dividend forecast is maintained as well. But as we do all the time, when we can fix increased profit, of course, we will increase the dividend because we would like to continue to maintain the payout ratio, 50%, which we have committed to you. So we will commit to increasing the dividend when our profit goes up. Thank you very much.
Thank you for the introduction. I am Nishio. I'd like to mainly talk about the progress of the medium-term management plan. Now, the current medium-term management plan started from the fiscal year ending June 2018, and this is for 5 years. So it's been a year and a half since the beginning. And our target of this plan is to become global human resource services company with technology at its core. In terms of numbers and also measures, we are making a good progress. Now, first looking at the numbers, as you see on slide 3, our target for this fiscal year is the target for the third year. This is something that you already know. At the beginning of the year, we thought that those are the too high target for us. But as Sato, CFO, explained to you, actual growth of our businesses is faster than this. So we are not concerned about the progress in terms of numbers. So today I'd like to focus more on the strategic measures which are included in the medium-term management plan. Now, as for the strategies, slide 4 shows 4 major growth strategies. First is to increase or grow our core engineer staffing business. Second is to shift toward higher added value. The third is the globalization. And fourth is move toward platforms utilizing IT. So from the first to the third measures or strategies, in order to realize them, we are trying to pursue aggressive M&A activities. Now, most easy to understand in terms of the achievement is the progress of the M&A. Slide 5 shows that we have first of all acquired PC Assist in September 2015. Starting with that, until December last year, we have realized 12 M&As. From fiscal 2018, we have become more aggressive in promoting M&A. So in fiscal 2018, we had 5 M&As, and for this fiscal year, up until the first half, we acquired, for example, the company called TechnoPro, which focuses on the seismic resistance diagnosis and design management, and also MI System, which is in the area of the ERP, especially the SAP system implementation, and Orion Managed Services, which is in the engineer staffing and reference service in UK, and also the SoftWorks, which specializes in the upstream of the model-based development. So those 4 companies who joined our group, their contribution in terms of the revenue and the profit, roughly speaking, on the annual basis, it was 4 billion yen on revenue and 300 million in terms of EBITDA. So they are contributing to the numerical growth of the group, but the higher expectation is in the area of the higher value added of business as well as the globalization. We believe that there will be a big contribution from those companies. Slide 6 shows the growth of the core engineer staffing business. As in the last fiscal year, the recruitment or hiring is going very well. We often talk about the labor shortage recently these days, but actually we are seeing the increase in terms of the number of applicants to our group, and also we have been strong in the mid-career recruitment as well as new grads. As it was mentioned, we will be welcoming more than 1,000 new grads this April. As a result, so every year we see the increase of the engineers on payroll of the group. The increase is actually the size of the medium-sized class company. And for this fiscal year, we will be focusing more on the core business expansion rather than M&A. Now, slide 7 shows some of the examples of our shift toward higher added value businesses. One company I am quite impressed with, if I may boast about it, is the company we acquired, SoftWorks, that was acquired in November last year. This company is in the area of the embedded auto system development, which has a strong needs in the auto industry. So they specialize in the upstream part of the model-based development. Now, in the past several years, we have been focused upon the hardware and software of the model-based development together with the D-Space in Germany. And we have been working on the midstream to downstream of the model-based development. And we have been training and fostering the engineers in those areas. However, in the upstream, that is to say that conceptual design and the detail design or building the models, this was the area where we did not have the engineers until now. But with the acquisition of the SoftWorks, now we can do all the processes of the model-based development from the upstream, midstream to downstream. In addition, our engineers can go through the on-the-job training at the development center so that they can become the engineers who have a skill in the upstream design. So we should be able to train those engineers on our own. And those engineers' contract unit price is high, and it is not likely to be affected by the changes in the economy. So we believe that in comparison to other companies, we should be able to become more competitive in this area. So we are trying to shift toward the higher value-added services, and this, I think, is a typical example of that. Now, in July, MI System joined the group. This company has a lot of experience in the system implementation of the SAP. It's a consultant and engineers, well-experienced ones. And we, of course, have the engineers in the area of the SAP, but together with the MI systems, we have created the ERP business team so that we can expand this SAP-related business. Now, since 18 months ago, we have started to work with a company called Albert in the area of the data scientist and data analyst training and fostering. I think you're already familiar with this. Now, after going through the training, those engineers are high in demand by many customers. There's a huge need there. So in addition to Albert, this fiscal year, we'll be working together with the ICE Factory, which is a company specializing in the data analytics. And we started to train the data scientists. Actually, in the past 18 months, the number of the engineers on our payroll in the area of the data analytics has increased from 0 to about 100. And we will continue to increase these engineers so that we can respond to the needs of the customers and the society. Now, turning to slide 8, this shows our progress in terms of globalization. In addition to our China business, we have expanded our footprint to Singapore, India, and UK. Now, there are two purposes to the overseas expansions. First, we are a Japanese company, so we would like to support the Japanese companies doing business abroad, helping their technological development abroad. March last year, we have acquired Helios Technology in Singapore. In November, we acquired Orion in UK. Both companies' executives accepted our offer since they believe that there is a huge opportunity in working with our Japanese customers. So that was major reason why they accepted our offer for the acquisition. The second purpose is to expand our businesses utilizing the non-Japanese engineers that we have abroad. Now, especially, I believe that India is going to be an extremely important market for us. And there are several reasons behind this. First of all, India, of course, as you know, has excellent IT engineers in huge volume. And in Southeast Asia, there is a shortage of the mechanical engineers. And there are a lot of mechanical engineers in India, which is quite attractive. Secondly, all of those Indian engineers speak English. It's a matter of course. Thirdly, it just happens that the Boyd & Moore, which we acquired in July 2017, and also Helios Technology, two of those companies already have, for example, in Hyderabad, in India, they have a footprint of recruitment in India. So that means that we don't have to build the recruitment footprint in India from starting with scratch. The fourth factor, it's a bit political. Unlike China, Indian people usually have a favorable view toward Japan. That's another factor. Of course, because they speak English, doesn't mean that the Japanese major customers will employ Indian engineers right away. There's a very high hurdle of Japanese language. So we start with the IT companies, which are likely to accept the English-speaking engineers, and also to provide our engineers to the Japanese companies doing business in Western countries, and also to those regions where we have a footprint in Asia and UK, introducing our Indian engineers. So we would like to create that path, and we can do so. We believe that our competitiveness will be improved. Now, fourth strategic measure is to build the business platform utilizing IT. As you see on slide 9, well, I'm not going into the details, but we are currently trying to build the businesses digitization utilizing AI. So this is talent management system, or what we call talent cube. It is a system, and already the learning management system LMS was introduced, and also e-learning system operation has been started. We are also making the recruitment system more sophisticated, and also building the portal site for the new grads. And from now on, we should be able to have a comprehensive system from the recruitment to assignment or matching, including the skill management, order management, and matching, and also introduce the support tool for the technical engineers. And as you see on the right-hand side, from this fiscal year, or from this year, I should say, we are working on the business operational reform. We have already started with this. And ultimately, we would like to utilize various KPI information that we can get from this mission-critical business system and utilize it for the talent management system, so that we can have a business operation utilizing the latest digital technologies. Now, as I explained to you, as for the strategic measures, we are making good progress based on our plans. And as it was mentioned, we are likely to achieve the numerical target of a medium-term management plan, actually 1 year ahead of the plan. So looking at the economic situation, probably it would become necessary for us to think about the revision of the management plan, although we don't know the timing. Now, that concludes my explanation on the progress of a medium-term management plan. Now, I'd like to move on to slide 12. This includes the 4 major topics which are related to the investor inquiries. And I'd like to share with you our view on those topics. Now, on slide 13. So one of the topics is, as a result of the U.S.-China trade friction, we are seeing the deceleration of the Chinese economy. So based on that, there's a question as to what would be the impact on our business. Now, on the left of this slide 13, it shows the R&D spending in Japan. On the right, we are showing you the historical staffing requests that we receive. Now, one thing I'd like to add on the right-hand side, the number of the staffing requests should be higher. However, we exclude those requests for which we cannot find the engineers, or based upon the contract conditions, we are unable to find a matched engineer. So we exclude them. So this is the effective number of the staffing requests. As you see in Q2, we are receiving a lot of orders or requests, so the supply is quite tight, and this trend still continues in Q3. And there are several reasons behind this. First, from Q2, it is true that a part of the mechanical engineering areas, companies, for example, machine tools and semiconductor, the orders are down in some cases. And starting with this fiscal year, we started to see some of the mechanical engineering customers are becoming more cautious. However, overall, order has not been impacted. So it's really individual basis, depending on their view on the forex and the economic outlook. Now, as we showed you on slide 10 of the summary of the financial results, one of our characteristics is the high percentage of the IT engineers. So IT demand is a domestic demand, and as you see on slide 14, on the right-hand side, software is becoming more complex, and digitization is going on. So in this area, there will be more labor shortage. So we expect the order or request to continue to grow. In addition, the construction industry is also strong. So we can more than offset the decline of the mechanical engineers with other areas, including construction. Secondly, our business is closely aligned with the investment of our technological development as well as R&D. Recently, the chairperson of the NIDEC Corporation, Mr. Nagamori, commented that even though the sales are down, their capex and technological investment is going to be continuing. So despite some recession, we expect not major impact on the investment of the technological development or R&D. As you see on the left-hand side of the slide 13, after the bursting of the bubble or after the so-called Lehman shock, R&D investment declined. But these recessions were driven by the credit crunch. So in the future, say that there is a global economic slowdown or slowdown of the Japanese economy, we believe that that would be the part of the cyclical change of the economy. So it will not impact on our business greatly. So we are not concerned about the demand at all. So we continue to believe that the key to our growth is going to be a hiring or recruitment. Now, slide 14. Say that there is a economic downturn. This slide shows the resilience to the economic cyclicality. So on page 14, this is a summary of what I have commented upon, so I'd like to mention other points. Now, a staffing service from the perspective of customers is a kind of a buffer or adjustment valve. So it has such function. So if the economy worsens more than expectation, the utilization rate could come down temporarily. Since we play such a buffer function, since we have those engineers as a full-time employee, in comparison to other human resource related businesses, our profitability is higher. So we keep that in our mind, and we try to strengthen our financial base so that we can deal with the fluctuation of the utilization. And last year, we increased our capital, and that is a part of the strengthening of our financial base. Secondly, And this is something that is encouraging to me, the technical skill structural reform of the engineers. That is to say, we try to foster and train engineers who will be needed in the future by our customers, focusing on the engineers with the technical skills, which has a very strong needs. So we have been doing so for a long time. As I mentioned, under the shift to the high added value, the increased development of the data scientists and also the engineers in the model-based development, and also the engineers with the strength in the package implementation of ERP or AI and IoT. In the mechanical design, we have also fostered engineers who have skills in 3D design, CAE, embedded software, inverter, and high-frequency circuit. We have continued to do so for a long time. So even when there is a recession, we have a structure or a system in which the engineers are not coming back or not returning to us. So even if they are returned to us, we have an internal training system, and also we have a menu of education provided by the PC Assist. So by going through those trainings, those engineers can be reassigned to something else. So we already have such a structural scheme.
を申しますと、先ほど一部の企業さん調子が悪いですよと申しました。
As I mentioned, some of the companies are struggling, and in those cases, those engineers will come back to us. We used to think that when the 2030 engineers come back, it was a big trouble, but actually we appreciate that these days. We know beforehand that some of the companies have been difficulty, so we already reassigned those re-engineers who are likely to come back or return to us. So this is something that is quite encouraging to me.
15で
Next, please turn to slide 15. I'd like to comment on the question regarding the hiring market environment and to your question as to whether this good hiring trend is sustainable or not. Now, the reason why hiring is very steady this fiscal year, again, is firstly due to the IT engineers, which we are very successful in hiring. According to the studies, such as the national census, there are around 2.5 million workers categorized as engineers, and IT engineers comprise 40% of this, which accounts for about a million. Now, even if we say that the job turnover rate is 10%, which is the national average, even if we say so, more than 100,000 IT engineers are available in the market every year. And because we are strong in this IT area, which has the greatest universe of applicants, our hiring is successful. And looking at our competitors, they seem to be increasing IT engineer headcount recently, but the scale is still small and thus will not be a threat to us as of today. And secondly, due to the structure of the nation's employment market, it is still very difficult to join a large enterprise if you're a mid-career worker. This continues to be the case. And since it would be difficult to work for a large enterprise, the options that one would have is to go seek a tech staffing company like us, or to work for a small or mid-sized business or IT company, or a large system integrator. But still, in the case of Japanese people, the Japanese workers still tend to aspire to work for big companies. And that is what brings us the superiority in this hiring market, because we are the one who can provide various jobs to these big enterprises, such as development and research in our clients' offices. So from our experiences with M&A, small and mid-sized IT companies in the regional areas reach a limit in growth despite their technological expertise. And this is because of the hiring limitations. And ultimately, these companies decide to join our group. We had several of these cases, and we feel this is true from our own experiences. Thirdly, in the case of new graduates, This situation is similar to mid-career engineers, actually. If you look at the slide 15 graph on the right-hand side, the green line graph shows the very bottom. The very bottom line graph shows the application ratio of new grads in companies with more than 5,000 employees. Now, the latest figure shows 0.37 times, which means that it continues to be a very narrow gate to get into. Therefore, when a student could not join a company that he or she wished to, their next option would be a tech staffing company like us, and that is why we are also successful in hiring these new graduates out of university. Of course, the threat in this case would be where large enterprises restart their massive hiring activities like they did in the bubble age. But that is not likely to happen right now because of the uncertainty, and also because in the typical Japanese employment environment with the seniority system and lifetime employment, in this situation, a company would try to avoid the increase in fixed costs. And therefore, it has become a typical trend that these companies use tech staffing services like us rather than hiring themselves massively. That's why we will continue to have good hiring from the new grads out of university. The number is growing every year. Well, I've mentioned 2 reasons, but other than these, our group caters to over 2,000 companies as the largest player in the industry. With abundant orders, we provide attractive jobs to applicants, and over 100 dedicated recruiters are active in our company. We have an organization with this, and they use the most effective channels depending on the times. They choose the most effective channel very efficiently. And recently, what has become very important is the quick response. So based on the precise KPI analysis, they leverage these channels and also respond very quickly to the applicants. This is another reason why we are successful in hiring. Let us move on to slide 16. As we approach April 1st, the day when finally the work style reform bill becomes effective, I'd like to talk about this and the impact of the work style reform bill to our business. Now, first, from April this year, the complex regulation regarding long hours of labor and the mandatory paid leave utilization of more than 5 days per year will be put into place. As you can see on this slide here, the average overtime per month for all engineers in our group is 17.6 hours, and 75% of the paid leaves are used. So we have cleared the regulation overall. But however, the point is to take care of each and every individual employee in regards to long overtime hours. So we completed an alarm system in accordance to the law, and a dedicated team from our headquarters will follow up on those individuals who may possibly exceed their hourly limits systematically. When it comes to using these paid leaves, the administrative staff members have more risks than engineers as a tendency. But as a company as a whole, we introduced a planned paid leave utilization system from this fiscal year, so we are prepared to align with the law and regulations. In terms of the impact to our business, we do estimate some decline in both top line and bottom line due to less overtime and more paid leaves. But if you remember our explanation on the average overtime and paid leave utilization rate, the impact will be small, with the one exception for staffing of construction management engineers. Now, in regards to the issue regarding construction management engineers, where the long hours of labor has become quite normal, the law will not be effective for another 5 years during the super busy season before Tokyo Olympics, and the construction industry, which is also facing a long-time labor shortage. So thus, the key was what is going to happen to our staffing business, but this is clearly going to be included in the scheme. So we feel very relieved that the construction management engineers will also be included in this 5-year period. Having said that, this division does include some older age engineers. So we will use an internal guideline of our own to make sure their safety and assurance is secured, in line with the spirit of work-style reform, just like other engineers. But as we pursue with the work-style reform and also the labor shortage situation in the society, we hear voices of concern that clients may adopt more full-time employees. We talked about this when we spoke about the new grads earlier, but that sort of trend is not accelerating in the engineering fields compared to the past, and it is hard to imagine them increasing fixed costs when technical development divisions tend to have the fluctuation in their workload seasonally between busy times and slow times. You know, if you have a project, you're busy, and if you don't have a project, you don't have work. So that's why we think it's unlikely, as you can see on the slide, 70% of the IT field is being outsourced. And this leads us to believe that clients and us, outsourcers like us, will continue to share roles in technology development going forward. Finally, I'd like to talk on slide 18. This explains our consolidated results and EPS trends from the fiscal year 2013. As Mr. Sato, the CFO, mentioned earlier, our share price went down dramatically since last autumn, since the stock market deteriorated overall as well. We, of course, sincerely accept the evaluation from the market. Our stock price does reflect that, but our core policy is sustainable, and but our core policy is to have very sustainable and stable growth in top-line profit, operating profit margin, and EPS. So we will continue to operate and drive our business so that we will be trusted even more from the market. In this regard, we ask you for your continued support. I would like to end my explanation here. Thank you for your attention, and thank you very much for your participation today.